Technology. All right. Today's sessions, ladies and gentlemen, we're going to be talking about understanding DCAA requirements, featuring Sharon McLennan, CEO of Renaissance Management Group. Welcome, Sharon, and thank you for participating. And we're so happy that you're able to join us to provide us with your knowledge.
Well, thank you for having me. It's always a pleasure to connect with the GPI community. We are always guaranteed very interesting questions and exciting conversations. So it's always a pleasure to be here. Thank you for having me.
Yes, this is what the community is about. Each one teach one. What I don't know, you may know. We all have resources. So it's all about, again, collaborating. So Sharon, today's topic is DCAA. Exactly what is DCAA?
Well, that's a great question, Paula. DCAA actually stands for Defense Contract Audit Agency. And so to give you a little bit of history about what the DCAA does is that they are responsible for auditing the procurement process for the federal government. So, a lot of people, from the whole IRS space kind of get really nervous when they hear the word audit. It shouldn't necessarily freak you out. There are a lot of things that we can do to be prepared for an audit, and we're going to talk about some of those today, but their main job, the DCAA, is to make sure that the government gets what they pay for and that the contractors are complying with the terms of the contract.
Would you say it's the same process as an IRS audit or completely different?
Well, that's also a very interesting question. The audit process is basically going to be similar because auditors, what auditing is that a lot of people don't understand is it's sampling. So auditors, they're going to look at big transactions. They're going to just double check to see if those transactions have been appropriately treated. And then they're going to pull some smaller transactions and randomly sample those so that they can get some comfort about the way that the entire process works. So when you're working with the IRS, they're going to use a very similar process to the DCAA, but the goal is different. In the IRS, they're looking for stuff you didn't report or that you treated incorrectly to minimize your payment.
Okay.
On the government side, they're looking for the stuff that you said you did but you didn't do, or that you've used to make more money than the government should be charged for. So even though the process is very similar, the outcome or the what they're looking for is two different things, if that makes sense.
Yes. Okay, very good. What is the purpose of the audit? And again, who would be subject to that audit?
Okay, the purpose of the audit, as we just talked about, is to make sure that all of the contractors are essentially complying with the terms of their contract. And who would be subject? Again, a very interesting question. Anybody who is a federal contractor could be subject, right? There's nothing that protects you or prohibits you from being subject to an audit. But there are some things that make it more likely for you to be audited than others. So, for example, when we have different types of contracts, and if you are the recipient of a firm fixed price contract, which means you and the government have basically agreed that you're going to perform service X, and in exchange for that, you're going to get paid a particular price or a particular amount, the risk related to that contract is on you as the contractor. So the government in those scenarios is a lot less concerned with how accurate your accounting system is or whether or not the costs that you're accumulating are correct, because whatever that number is, they're not going to be a part of paying for that. We've already agreed on a price.
Okay, can I ask one quick question? I have a firm who has a contract, and they initially when they submitted their bid and won the contract, they had 18 employees on that contract. They removed 14 employees from it, but they were still billing the government with the 18 employees under that firm fixed price. Is that still, would that be allowable?
Well, as long as the service is being delivered, I mean, when you have a firm fixed price contract, the government has contracted with you to get the service at a specific rate. However you do that, I mean, if you as a single individual want to work 24 hours a day, doing the work of 3 people, the government is not necessarily going to get into that, because as long as what is promised is delivered, it's delivered on time, and it's delivered for the price that has been agreed upon, we have no issue. Now, if you went back for extra billing or other things, then maybe that could be a different situation. But as long as they get what it is that has been promised, then the government doesn't really care whether it's 14 or 40 employees. I mean, the other side of it is they could have added 20 new employees, and they're now dealing with those costs. The government doesn't care, because you're not passing that cost on to them. They just care about making sure that their service has been delivered in the quantity, quality, and timeliness that has been agreed on. So whatever is going on in the back end of that, they don't care. However, if you have a variable type contract, where a variable cost contract where the government is going to be paying for maybe, say, time and materials, or it's a cost plus fixed fee contract, now you and the government are sharing the risk of the cost. And what the government wants to find out is, one, do you have the system in place to accurately gather the cost? And once they're comfortable that that is what's happening, do you then use the system properly to segregate the cost so that they only end up paying their fair share? Does that make sense?
Absolutely. I had a contract where it was a hybrid, meaning the fixed price, the labor categories were fixed price. And the other direct cost was considered the cost plus fixed fee, because again, you can never judge how much cost is the government's going to have to come out. So it's interesting just seeing the different types of contracts and how they structure it. But we want to make sure we're in compliance.
There's a lot of variation in that, and different industries tend to go in different directions. For example, engineering typically, because that's more considered professionals, are cost plus fixed fee, because they don't want them to cut down on the quality of the service. But they want to make sure that they're keeping track of the hours that are being spent, because there's typically a public safety constraint. Same thing in construction. They don't want you to cut down on the hours. They want to make sure that they're getting what they need, and that tends to be variable on larger projects. But they want to make sure that whatever the pools are that you're using to do your allocations, one, they make sense. The controls are in place to protect them, and you're not ending up overcharging them. At the end of the day, they just don't want to overpay.
Okay. So what are they looking at when they're coming in?
Well, that's an interesting question, and the good news and the bad news is that you have several different types of audits. So depending upon, and they usually notify you in advance about what type of audit you're getting. So it's not like they come in looking for one thing and go out looking for another, unless they find something that they think requires them to increase the scope of the work that they're doing. They typically will notify you what it is that they're coming for, and that's what they're looking at. So for example, sometimes one type of audit is a pre-award survey of your accounting system. In that case, they're just coming in to see what are your internal controls. Does your system work? Is it set up to capture the cost that, in an appropriate way that makes it easy to allocate? Is it harder or easier to game the system? Because again, they don't want you to be cheated by your employees and they end up paying the cost. So that's one type of audit. Another type of audit could be an incurred cost audit. In this case, they're not looking at the process. They're actually looking at specific costs that have been billed to them, and they're going to go back. That they're going to be looking at the backup to say, well, how did you arrive at this number? And is this the number that you really should have billed us? So depending upon the size or the scope of the audit, they'll be looking at different things, but they'll let you know before they come, because the better prepared you are, is the less time they have to spend.
So they'll provide you with a list of things that they're looking for.
Yes.
I actually went through a incurred cost audit when I closed the first business. And again, not understanding what they were looking for, just, okay, they want me to do an incurred cost, whatever that means. But in the end, that ended up being to my benefit, because what I realized, just as you said, on those types of audits, they were trying to see what I actually spent in my overhead categories, what I spent in my fringe benefits, and my G&A. And they ended up owing us money because we had not billed them properly. So I ended up, even after I closed my business, getting an $85,000 check.
Well, that's definitely a success story, because most of the time we're afraid that it goes in the opposite direction. But that's great. That means you were underbilling them for overhead, and so that worked in your favor. But yeah, they do for terminations. They audit termination, in terminations, incurred costs. Just different types of audits. They usually provide you with something that we call a schedule, that they need things prepared by the client. We call it a PBC, prepared by client list, so that you know what it is that they're coming to look at. But you know that working from that list helps you to be prepared to respond to their questions.
And I also had a firm in my portfolio in Pennsylvania. He actually got in, really, it cost him a whole lot of money. One of the agencies came in and said, we have a staffing contract and we only need a company for a year. And do you have a staffing company? Yes, we have a staffing company. We called the firm. Are you in compliance with DCAA? He told us, yes, we're in compliance. But he also negotiated billing them a month, because he was picking up 40 people. It was a $3 million contract. He was billing weekly. What happened, it ended up triggering an audit. And when he came in and they looked at the audit, they found that he was using a subcontractor that was never a part of the RFP. Wow. And that they had different rates. So he ended up having to, the government stopped paying him until he got his system in compliance, which ended up costing him about $50,000 or $75,000. Wow. In the meantime, he still had to pay those employees. So it is key. So how and when do you begin to prepare for that audit?
Well, in my opinion, the best time to prepare for an audit is when you're getting set up. Okay, so when you're setting up your books, and I know a lot of the people in our GPI community are newly established or new divisions of their business in this government contracting space, and so now is the ideal time to go ahead and try to set your system up so that it is compliant with their system. What that means typically is you're working off of more of a cost accounting approach than a financial accounting approach. And that's why it's important to make sure that whoever you're working with, they're people who are knowledgeable about the government contracting accounting system. At least they have to be knowledgeable about cost accounting, because that's what you're going to be doing as you set up your business. Now, as I said, if you're starting out and you're just getting, you're going after firm fixed price contracts, the chances of you being audited right away are probably much smaller than if you're working for DOD on a multi-million-dollar contract. But I always say, when the numbers are small and the transactions are fewer, that's the time that you want to fix stuff, because when the machine starts to go and you're now starting to pull in that volume, you are not going to have the time to be able to set your structure up. Additionally, if you did something and you did it incorrectly, one of the things that you're going to have to do is you're going to have to go back and undo what you did to put it in the correct format. So it costs more money, and it costs us certainly a lot more time if you do it on the back end. You know, everybody pays. You pay in the front or you pay in the back. So my recommendation is do the work on the front end, get that going, and have the confidence of knowing, okay, my system can be scaled into whatever contract I am going to be going after, as opposed to going to get the contract and then worry about, oh, but how am I going to scale my system after?
And that is so true. Having gone through those 6 companies before I started my own business, I saw most of those companies, the accounting system and divisions was the weakest part. They never knew where their money was coming in and out. And with the type of industry I was in, it was a lot of reimbursements. You needed to track all those details. And so to me, it makes sense. And I wanted to be in that position too. At least establish your system initially. You don't have to revisit. And you, as I tell you, Sharon, you know I hate accounting because it's all those little tiny pieces of paper that you have to be accountable for. And it has to, everything has to match up.
Yeah, no, but at the end of the day, I think that we're in a different place now. I mean, the systems and the software and the cloud computing and the accessibility of the information has definitely revolutionized the way that we can come at this. I mean, you don't have to wait until you're in your office on a Saturday with your box of receipts on your accounting computer. You know, that's not the environment anymore. Okay. But what I will say, no, it's not. So everything can be done. A lot of stuff can be done electronically. Stuff interface, systems interface with other systems. So a lot of the manual, tedious aspect of it is not what it used to be. It's much more streamlined and easier to get to. But I think, if there's one thing that I preach to folks, even if you're not in government contracting, a lot of us, we are business people. We have a core competence, and that is what we focus on. But at the end of the day, you're not in the business of building bridges or constructing homes or doing personal development or whatever your business is. You're in the business of making money, and the way that you make money is the function that you do. So if you look at your business that way, you're in the business of making money. You cannot neglect the actual tasks that you're doing. So get everything set up, make sure that you are comfortable with your numbers and your system, and that you are looking at them, because even if it's a bad story, you're not doing as well as you working the way that you think it is. If what you're doing isn't working, then you need to make a change, but you can't do that if you're not monitoring the numbers. So I promise I'm gonna put my soapbox away now. No more lecturing on that. But you just really have to be in tune with the numbers.
You're like something happening on your side of it. It's like going slow, but let's open it up. Now I think it's better. Anyone have any questions that you'd like to ask Ms. Sharon? Please unmute your phone. Anyone?
Ms. Sharon, this is Jeff. Is there a program that I can actually add to QuickBooks to help me understand of how to make the DCAA compliant better in QuickBooks?
That's a great question, Jeff. And the good news and the bad news is no, there isn't. QuickBooks in and of itself can do the work that you need it to do. You just need to make sure that your chart of accounts system is set up correctly so that you can track the transactions that you need going forward. So there's a lot of literature. There's a couple of checklists I can send to Paula and ask her to distribute to the class or to the group that talk about the things that you need to look for in a DCAA compliance system But the good news is that QuickBooks is able to do that for you.
Okay, thank you.
And Sharon's going to be actually rolling out a series of classes that's going to, again, the same way that we're walking you through the contracting side, I encourage and beg Sharon that she bring her expertise in showing us the accounting side of it. Because a lot of times that's not our background. We know we do what we do. But as a CEO, it's important that we understand it, because in the end, you're the one that's going to be accountable for it. I mean, even something as simple as a general ledger, that's accounting language. No one, an average person is not going to know what a general ledger is. And do they still use that as part of it? I say back in the day, they had the paper, and it was just a big old book that they were matching the counts.
16 columns, the 16 column green sheets. No, we don't use those anymore, but they still call it a ledger.
So you see, I'm going back and been traumatized by the accounting person. So that's why even me, that was the hardest part of that first business, was finding someone that understood a government accounting. Even being in DC, you would think, but if you don't, ooh.
The one other thing that I want to share with everybody is that there are some categories of costs that you have to be aware of. The government does not reimburse. So one key way to make sure that your system is DCAA compliant is making sure that you set aside a section to account for costs that are just not allowed. So for example, they don't pay for advertising. Generic advertising is not a cost that the federal government is prepared to cover. They also don't pay for any type of public relations work that you do for your business. They don't cover that. Alcoholic beverages, they're definitely not going to pay for that. They don't pay for any entertainment, any personal travel. They obviously will pay for business-related travel, but they don't pay for any personal travel. If you have a charge against you and you're defending yourself, the legal costs related to any type of matter like that is not one that is typically borne by the federal government. And similarly, if you haven't complied with some rule or law and you get penalized and there's a fine, you need to be able to segregate those costs out of your general operations, because they're not prepared to pay for those. They don't want those to factor into, when you have that cost plus contract, that can't be a part of the cost. So the DCAA compliance is a system to identify different categories as opposed to the system itself.
Okay, thank you. So you mean that $3,000 suit that the partner charged to the business that was custom made with his initials going down the pinstripe, the government wouldn't reimburse us for?
No, I'm afraid not.
So
I'm afraid not.
Can you even share the importance of segregating those costs and making sure that you're not mixing personal with business?
Yeah, for sure. I mean, a lot of times when you get started, where many people are operating on a shoestring budget, the business itself is not generating any income, and so you basically are running your business out of your personal checking account and your credit card and your resources. I would recommend to folks that the first thing that you should do as soon as you see your way clear is make sure that you set up your business account separately. And try to, even if you have to fund that business account from your personal account where you transfer money into that account to be able to pay the expenses for the business, it just creates really good discipline, and it makes it a lot easier as you go forward to try to track your expenses. I was surprised, one of the things that we were required to provide when we applied for our Hub Zone certification is they were asking me to provide the check that I used to fund the business initially, show that going into a bank account. Well, my business has been around for 18 years. So I just was not able to do that. But if I was a younger business, if that check had been written from my personal account as opposed to, the expenses that I'm claiming are expenses of the business, I would have had a problem trying to explain that. So I strongly encourage segregating funds. The longer you wait is the harder it gets. I don't know about you guys, but my memory is not what it used to be. You forget stuff, you don't include it, you cheat yourself because you're not getting all your deductions in the right place. And so it's really important to try to segregate your business expenses so that everything comes through the business and your personal is in a different bucket, different space, and does not get commingled.
And what I've also, would you say if you're a 1099, as an example, to show and generate revenue for the company, would it be okay to have that company, they write it to me personally, but then I take that check and put it in the company and reimburse myself that way? Is that okay to do it that way so that I'm beginning to show that the company is generating revenue?
Okay, that is the perfect way to do it. So say, for example, you did a job and the compensation for the job was $2,000. That $2,000 check or payment should be made to your business name, not to you personally. And that money can be put into the business account, and from the business account, you can then pay yourself. I mean, that's the beginning of segregation. A lot of clients that I have started out, they did the work, they had the check made payable to themselves. They put it in their personal checking account, and then they kept, that's the way that they operate. A couple of things happen when you operate that way. You don't have a track record to show the bank when you're looking for funding. And I could tell you that one of the biggest challenges young businesses have is getting access to funding. If you can show the bank that you have a track record where the business has generated this much income, here it is, I can show it to you in my account, it makes it a lot easier. It shows them that you have the discipline to put the money where it's supposed to be, and it also provides a really clear trail for them to see how well the business is performing. So I would strongly recommend, if anybody on the call does not have a business account set up yet, even if it's not a lot of money, you need to go ahead and take care of that right away, because the longer you commingle is the harder it is to ultimately do that separation.
And but I was saying, if they said, we don't want to pay your company, we're hiring you as a consultant, so that 1099 has to be issued to you personally. Can I again take that check and dump it into the business and then reimburse myself that way? That's what I was asking.
So let me, to make sure that I understand the question, you've done the work and the company doesn't want to pay your company, they want to pay you.
Correct.
So they're giving you a payment that's made payable to you?
Correct.
Okay, so the first issue that I see with that is that if the check is made payable to you, you may not be able to deposit it into a business account.
Why?
Because that's not the payee on the check.
Oh.
Yeah. That's not. Okay. So what I would say to you is that make it clear to them that there's no reason why they shouldn't pay the company versus paying you. So, say the check needs to be paid. You can hire me, but the payment needs to be remitted to this entity, and you give them your business name.
But I'm saying, what if I deposited in my personal account, then I wrote a check to the business, and then I reimburse myself?
Okay, if you wrote a check to the business, the challenge with that is checks that you write to the business would be viewed as a capital contribution to the business. Okay. Right? So when you start a business, you put money in there to fund the business. Okay. That revenue that you're getting, if it's not that the business did the work, what you're trying to do is you're trying to develop a track record of the business doing the work. Okay. So if you're doing the work and then putting the money into the business, that's the equivalent of you funding the business. And so that now does not show up as revenue, and that doesn't help you in the long run as you're trying to build this financial track record. That just looks Paula's bailing out her company, or Paula is helping to fund her company, but that doesn't show up on an income statement.
Okay. Right. That's good. Good. Thank you. Thank you. Thank
Yeah,
you.
no, let them pay the company. They should pay the
Yeah.
company
And
directly.
then, and sometimes I get, even me now, I get businesses wanting to issue me as a business a 1099. Is that something? And I'm like, I don't need a 1099 because it's a business to business relationship. So is it required that businesses issue your small business a 1099?
Technically speaking, from a federal perspective, the 1099s are only required to be issued to entities, to individuals. So if you have a company that you're paying, technically you're not required to issue the company a 1099. However, penalty for issuing it. So they would rather issue it for everything that they paid and not have to worry that they overlooked someone than have to go through and spend the time to figure, well, who's a person and who's a business. And so it's for them, it's convenience. For you, you can get it, put it down. As long as you've already accounted for the money that you've gotten from them and you're reporting that in your taxes, the 1099 can go in the circular file because you don't really need it. You're going to use your accounting system where that payment was already recorded to report your income.
And so, and that's vice versa. As they're looking at opportunities, they're not gonna be responsible for any subcontractors in issuing any 1099s to them.
Correct.
Okay. All right. Well, I know we went over, but I just had to get those dying questions. Sharon, can you give them your number and how they can reach out to you?
Okay, sure. My telephone number is 754-246-6002. Number again, 754-246-6002. And my email is Sharon, SHARON, at R as in Renaissance, M as in management, G as in group, America, AMERICA.com. You can contact me via phone or email, and I'm happy to help with any questions. And I will also get that checklist together and send it over for Paula so she can circulate it to the folks on the call who are interested in getting that information.
Okay, can you put it in the chat feature while I go back through my 30-second elevator speech?
Sure.
Okay. Also, again, the government procurement federal training program will start Tuesday, April 16th from 8 to 9 p.m. We need a minimum of 10 people in order for us to start a program. We're going to have our orientation session tomorrow from 8:30 a.m. to 9:30 a.m. You can go to our website to register at gpiwin.com. The program is a 3-program module, 8 weeks, 1 hour a week online. We also are now launching our standalone executive coaching sessions. For our current students, you can buy blocks of sessions to use at your discretion. Maybe it's reviewing RFQs or source of SART notices or RFP or much more. You also, for new GPI CEOs, this is the rate, but this also includes the 24-week program module. For more information, you can contact us at 678-822-2303. I'm going to get used to these commercials shortly, but thank you. And everyone have a wonderful weekend, and we look forward to you becoming a part of the community if you're not. Otherwise, we'll see everyone next week in class. Good evening or afternoon.